Folks, good morning and welcome to Swing Trading today for the 14th of June. It is at current 5:17 in the a.m. Eastern Standard Time. Let's get to the pre-market activity. We're going to kick things off first with the chart of the U.S. dollar, which is declining. Now, yesterday, prior to the Federal Reserve meeting, I got nervous and sent out a quick lunchtime update to our members, and I wasn't so nervous about the reaction to the headlines by our more experienced, more seasoned members. I was more concerned about impulsive trading on headlines by our new members, because as I always like to teach members, the knee-jerk reaction by the market is frequently wrong. Everybody expected a rate hike yesterday. There should be no shock. So here's what I had to say prior to the Federal Reserve announcement yesterday regarding the U.S. dollar and gold. At current, you're looking at the dollar on a 4-hour basis, and we have broken support. We are headed down to test probably the 93.50 level, and you can see that we have a head and shoulders setup. Left shoulder, head, right shoulder, and let's call the neckline right here. Let's highlight that. Okay. So, as I've been mentioning, the knee-jerk reaction of the market due to the algorithms is usually the wrong reaction. So, if the dollar rallies on the announcement, expect that rally to probably fail. Not always, but probably will fail. Now let's take a look at gold. Gold is back above 1,300 again. No breakout. Notice how gold is at a breakout point while the dollar is at a support level. So you have to ask yourself, is this a head fake? Are they giving the appearance to gold of strength while they're giving the appearance to the dollar of weakness? You have to assume the worst because these guys are nefarious. So this is why I'd rather trade on the news. So regarding the U.S. dollar, had you bought the U.S. dollar expecting the dollar to rise because the Federal Reserve raised rates, well, you would have gotten hammered. Because here was the reaction. Let's drill down here some. Here was the reaction by algorithms, amateur traders, and dumb professional traders. They bought the dollar on the news. And I told members, don't do it. Don't go buying the dollar. Don't do anything. Allow the market to settle down because in all probability, the knee-jerk reaction will be wrong. Sure enough, we got our rate hike. The dollar rallied. And not only did the Federal Reserve announce a rate hike, their dot plot, quote unquote dot plot, which is their forecast for how many interest rate hikes they would have in 2018, went from 3 to 4. So very bullish for the dollar, yet the dollar sold off. So the computers got it wrong. Amateur traders got it wrong. And dumb professional traders got it wrong. What do? We waited. We were taking a look at gold because gold on the news, you should have expected to go down, which it did. The problem was it was going down before the Federal Reserve announcement. Let's drill down. This is a 4-hour chart. Let's go to a 15-minute chart. Here was the Federal Reserve announcement right here at 2 o'clock. And you could see the prior 15-minute bar. If I didn't say this is a 15-minute chart. The prior 15-minute bar, they tried to rally it, and they sold strength, and then on the announcement, they took it down. Now, what we did is that since we appreciated the fact that the knee-jerk reaction of the market is usually wrong, we bought gold. We had an advanced order out there. There was no need to go sitting in front of our computer, crossing our fingers and hoping that it would come to us. If it didn't come to us, well then, no big deal. So how do they know where to put my advanced orders so I don't have to sit in front of my computer trading screen all day long? How do I know? It's very simple, folks. This is what I teach members. Learn how to use support and resistance levels. Now, what did we do on this sell-off of gold? Well, we were looking at the NUGT, the Direction Leveraged ETF, putting you long of the gold mining names. Here you have it. This is still a 15-minute chart, and you can see that there was pressure on the NUGT prior to the Fed meeting. Then after the Federal Reserve announcement right here, they sold it off. So if you will remember, how would you know where to put your advanced order so that you can go back to your day job and not have to sit in front of your computer trading screen all day long? It's very simple, folks. We hit not one historical support level, but two. And you could see by this wick right here, this shadow, this bottoming tail, whatever you want to call it, the market sent you a signal. All you needed to do was put an advanced order down at $24.80 to $24.70, and you would have gotten filled on your order. And if it didn't come down to you, so what? Now, we got filled on our order, and we are now profitable on the trade. And we should, given the price action of gold, we should move higher this morning on the NUGT. Now, we have the ECB meeting coming out later on today. Now, if they are hawkish on yields, well, then the euro should rally. If they are dovish, the euro will drop. What we want to see, as we are now long of gold names, we want to see them become yield hawkish. Why? Because we want the euro to rally and the dollar to drop. That's good for our gold position. And we are also long of silver, which did excellent yesterday as well. So the market sold off yesterday, and we knew it in advance of it happening. How did we know that the market was going to sell off after the Federal Reserve meeting? Check out my lunchtime update with regard to the price action of the volatility index and the S&P 500. We'll leave off with the VIX. The VIX is looking very, very interesting. Take note of this higher low, and we have broken out right here, you can see. And a double bottom setup. Watch for a rally up and through 45 on RSI 4-hour chart. Now on price, what we're looking for is a close above 13 and a quarter. Very tight trade. And we're starting to lift off the bottom of the session. So a warning flag is on the track for longs. Think about booking some profits because the VIX is getting set up for a rally. Taking a look at the Direction Bear ETF on the S&P 500, we have broken out on a 4-hour chart and on RSI. I think that we may sell off here after the Federal Reserve announcement. That's the feeling that I'm getting, folks. The VIX is signaling the same, the SPXS as well. But I'm going to leave off with this. Remember, I'm going to pound the table on this. The knee-jerk reaction by the market is frequently the wrong one. Not 100%, nothing's 100%, but it's frequently the wrong one. Don't allow yourself to get suckered in by the headlines. It's the algorithms that are dictating trade. Let everything settle down. The press conference is going to be where the news is. And pay particular attention to the question asked about the yield curve. That's it, folks. Let me get this out to you. Okay, folks, so here's where we were trading when I recorded that commentary, right? We were stabilizing. We flashed a doji star formation here, a sign of indecision, a sign that this downtrend may reverse. We had broken out on RSI, and then by day's end, we had broken out above this upper band of resistance. The S&P 500, and by the way, it looks as though we're going to pull back here on VIX, and then we are going to rally. That's my guess. Now, when you take a look at the SPXS, which I also went over, I made mention that the RSI had broken out. I mentioned that I thought we were going to sell off, and that's exactly what happened. And this is the value of knowing the charts. Let's talk about how we look going into the new trading day. S&P 500 stabilizing, holding support. We are in a trading range. Remember that the Federal Reserve announced yesterday that they are forecasting a fourth rate hike for 2018. That's not going to be good for the markets. I don't believe that we're going to get a third rate hike, but I could be wrong. Why do I believe that we're not going to get a third rate hike and really doubt a fourth? I'll talk about the yield curve with members later on today. If you're not currently a member, do a Google search of the yield curve. We hit a multi-year low yesterday, and it is forecast the past 6 or 7 recessions. And this is what I teach members. So be careful of this market. The market is waiting for the ECB to announce their interest rate decision, which they probably will not raise rates. It's all about the statement. Let's talk about Bitcoin. This is a request by one of our members, one of our gold members. Now, Bitcoin, I've been bearish on. I really haven't been looking at it much. And wow, really weak. And we broke down. The last time I spoke about it, I said, be careful of a break below this support level here at 64.85. Where are we now? 64.75. So we're right there. We're right below it. So now the question then becomes, do we break down below the lows of February the 6th? And that low was 59.70. We're sandwiched right between a support level and a resistance level. That resistance level last seen back on April the 6th. Now, my guess is that given where we're at, I think that we get a rally. I'm not expecting a massive rally. I think that we will get a relief rally. We'll probably head up to primary target level number 1, the 7,000 level. Price target number 2, if we're able to rally up and through the 7,000 level, would be 7,476. It's at that point where I believe that we will probably roll over. Why? It's because I may be a contrarian, but we need to respect the trend. And the trend is clearly down. We're making lower highs and lower lows. So the probability of a rally failing is pretty strong. Why do I even believe that we will rally right here, right now? The reason is that we stopped going down. One, right? We bottomed out at 6,100. This daily bar here, we have not put in a new daily low. We came very close to prior bar to tapping the third standard deviation Bollinger Band. We did not hit it. Now let's drill down to a 4-hour chart. We have a double bottom setup on RSI and a breakout. So what we're looking for here on the 4-hour chart is a breakout, which we have. We have broken out this 4-hour bar. Do we close there? I'm not sure. Time will tell. But if we close out this 4-hour bar, which is going to be, it'll close out at about 9 o'clock Eastern Standard Time. If we close out above this upper band of resistance, we should rally up to one, if not both, of these resistance levels. After that, it's highly questionable whether or not we're going to be able to continue higher here. With all the volatility in the emerging markets, the fact that Bitcoin's been going down, that's a concern. I mean, fundamentally, Bitcoin was supposed to be for those folks without a universal currency outside of their own banking system in the third world. Take a look at countries like Syria, Turkey, Argentina, Venezuela, and so on. They're not supporting Bitcoin. So if you have the emerging markets in turmoil and Bitcoin can't rally, something is very, very wrong here. Let's move on. Be careful with this trade. All right, we're going to go through a few other member stock chart requests. I'm going to blow right through these. I'm a little bit long in the tooth here. I know I can get long-winded. My apologies. Costco daily chart. We were bullish on it on this breakout and this breakout. You know what? It could still probably head higher, but we are showing signs of topping action. I'm worried about this entire market, folks. We've had a nice rally back, but I think we're due for a pullback. Amazon. I think we're setting up for a double top here, and we'll probably get a pullback. I would be looking to put on a short trade of Amazon if we break down below this low here at 1675. Do I think that Amazon's going to crash? No, I don't think that. But I think that this price action is weak and volume is horrible. Take a look at this volume throughout this entire rally higher. It's been horrible. We've had one day out of the past, say, 2 months where volume during this rally has come in at or above average to the upside. Forget about the downside. We've had that. So I'm worried about Amazon here. We may be looking to short Amazon fairly soon. Members, stay tuned for an alert. Domino's Pizza. We bet on a rally back here. Another one back here. I still like it longer term. I think it's long in the tooth. We saw a reversal bar yesterday. I would not be a buyer. I would be a profit taker of shares of Domino's. Take a look at ADX green, setting up for a possible double top, and in red, a double bottom. Folks, I've been pounding the table on Domino's for a long time now. You should have a big profit in it. If you want to hear my commentary about Domino's, go to my website, enter in the search bar on the vlog, DPZ. It'll come up with all the commentary I've done on Domino's Pizza. You can see how I've been calling this rally for a long time. It's time to book some profits. I'm not predicting a crash here. I'm worried about the overall market. Longer term, Domino's Pizza will probably head higher. I think it's going to rest, though. Grubhub. We have been bullish on Grubhub. We traded Grubhub. We booked profits on Grubhub. I need to do a video, a post-trade analysis of that trade. We made a handsome profit on it. It's time to pull the eject button here and book some profits. We are leaning into the third standard deviation Bollinger Band. I'm not saying sell your entire position. At least use a trailing stop loss order. Make those profits real. We're going to get a pullback. It's going to happen. Play with the house's money. You should have a nice profit by now. Book some profits. Let a few shares ride. Facebook, not loving it. I was at the gym yesterday. This guy recognized me from YouTube, and he asked me, what do I think about Facebook? He was an older gentleman, and he was nice up until that point. I said, I'm not loving it. And he wasn't that nice afterward. Apparently, it's in his retirement account. I said, listen, don't blame me. The charts are setting up. They're pretty sloppy. You've had a lot of bad news. Lord knows how it's going to adversely impact their earnings. And you could see that yesterday on the news, we reversed to close off the highs of the day. So this is what you call a hollow-filled candlestick. Not good. You might as well close down in my book. So here is the line in the sand for Facebook. Okay, so here's your upper band of resistance. If we break out above 195, well then, hey, it's off to the races, right? 195.32, I should say. It's off to the races. You want to buy the shares. Now, if we break down below 190, we're going lower, especially if we break down below the 187 level and, God forbid, the 182 level. If we break down below 182, we're probably going to retrace all the way down to 168. So watch out for this lower band of support. And much like with Amazon, we've had one single day over the past, in this case, a month and a half, almost 2 months, of one day of volume meeting or exceeding the average daily volume. What's wrong with this picture? What's wrong with this picture is that we've had a rally with no institutional accumulation. So when it drops, if it drops, it's going to be ugly. Folks, this market is about to get really interesting, and many traders trade on impulse, and they believe that markets can't go down and the markets will always go up because that's what CNBC says. If you listened to CNBC yesterday, they would have been telling you sell gold, buy the dollar, because the Federal Reserve increased rates as everybody knew they would do. And not only did they do that, they expanded the number of rate hikes they expect to have in 2018 using their dot plot. But what was the reality? What did gold do? Gold rallied, and it's still rallying. What did the dollar do? The dollar dropped. What did I tell members yesterday? Don't trade the knee-jerk reaction. Are my members profitable right now if they listen to me? Absolutely. Are they setting up for an even more profitable day today? Absolutely. So who do you want to listen to? CNBC and the talking heads? Or do you want to listen to a guy that's been trading these markets and teaching people the charts for 20 years? Please follow me on YouTube, subscribe, click the bell, leave a comment. Make it worth my while to make these videos in the morning and send them out free. And enter your email address on the website. We'll send you out a few trade tutorials, and you'll get all of my commentary free and paid into your inbox. Never miss a video. Everybody have a profitable trading day. Beware of the ECB decision this morning. The same holds true for it. The knee-jerk reaction will be wrong. All right? So be careful. Don't trade the headlines. If you want me to do a swing trading commentary tomorrow morning, leave a comment below. Let me know, and I will speak to you soon. Be well.